The first chart that I'll show is the last chart that we discussed in the previous update, a potential move of Nifty 500 towards the 200-day moving average. Now, this has begun, but I still don't know whether we have it in ourselves to go back again and then revisit this level. See, this is where a lot of risk reward will start turning into your favor, which is something I covered in the last episode. And it is entirely possible that if this is breached, then we may go a little bit lower also. And this is the structural change in the market that I want to explain. I still remain very bullish in the market. I have about 36-38% cash, which I'm waiting to deploy closer to 200 DMA, a little bit below it. And there are some structures that I'll explain you today so that you can cut through the noise and decide for yourself what is happening in the market. So I'll begin by covering the strongest sectors in the market to give you an understanding of what structural changes are happening in the market. See, whatever price action you're seeing today in various sectors, this is the chart of Nifty Defense, is with respect to the move you've seen from the lows of March to the highs of May, June. This basic understanding is important because this will otherwise look to you as a downtrend, a new downtrend in the market. So for this, first I'll just tell you all these sectors that I've marked out here, these are the strongest sectors according to me in the market. This is where I'm allocating my money. This is where I'm attempting to even allocate as the price is moving lower. Every day we are having some news flow that is causing our markets to move lower. Whereas these are some other sectors which I have on my watch list, but not necessarily I'm allocating a lot of money. So these top 10, 11 sectors. I'll begin with Nifty India Defense. Now, this is a pocket where there was a lot of momentum buildup that was happening. People were blindly chasing this particular sector. I think this particular week, 16th May, I had come out with an update on this particular channel where I had mentioned that for defense, for capital market, don't have a short-term view, don't chase in the short term. This is a long-term trend. And now I will tell you Nifty Defense, Nifty Capital Market, and a lot of spaces that I'll talk about, these are getting back to lucrative risk reward levels from long-term trend and medium-term trend. Now let me explain what is happening. On this chart, you see a clear higher high, higher low structure, but now it appears this is a distribution and now this is a new downtrend that is playing out. Actually, what is happening in my understanding, and I can be completely wrong, if you switch to the weekly time frame chart, this vertical move that you see, this is one major pivot. Another major pivot is getting formed. To explain this better, I'll pull out the chart of Nifty Bank. Nifty Bank, because there is a lot of data. Can you see this vertical move? Invariably, you see a retracement. This retracement, if you see, is of 18% on a weekly time frame chart. I can bet you whoever was trading Bank Nifty back then, this structure on a daily time frame chart would have thought that this particular index is now into a bearish territory. Do you look at this kind of retracement, a complex retracement? This was a 23% retracement, and yet over the period of few months, Bank Nifty kept heading higher. I'll again explain this with a simple chart. This is 13%. This move that you see that played out is 10%. I hope you get the point. Recently, we had a move of 13%. So now we are having one more down move, which is likely to stop maybe at a 10% move or a 6%, 5%, or a 10, 11, 13%, nobody knows that. But it will be above this level because that is how price moves high. That is higher, high, higher, low. It is just that if you map out the news flow in these areas, you will always find that there is something to worry about. This particular, the recent cycle, it was about recession. It was about so many things. India has outperformed. India is going to fall. Those kind of things. Even here, a lot of war kind of news flow. And now this correction has begun on the back of what America is doing to other countries and what it is doing to India. So this is how stock market progresses, and there is no reason you should be afraid of what is happening today. Instead, look at it as an opportunity. The more price retraces, the stocks that you missed out when the previous move was playing out from here to here, this is the time to again start looking, especially in sectors like defense, in sectors like capital market, in sectors like Nifty IPO. You take a look at Indian Hotel, not a stock, but as a sector. This has Indian Hotel, ITC Hotel, Chalet, Juniper, Sami Hotels, Orient Hotel, Taj GVK, EIHA Hotel, then Royal Orchid. This is a clear higher high, higher low structure, fantastic relative strength, at least visible on daily and weekly time frame chart. You look at all the hospital space, just look at the relative strength that is there. This is nothing but consolidation happening. Even in Nifty India Defense, on daily time frame chart, this does not look good. But if you look at the weekly time frame chart, absolutely nothing is wrong. A major pivot is getting formed. Today, this looks really ugly. But who is to say that price can stabilize somewhere here, form another base, move like this, and again go up? And then this would look as a great opportunity in hindsight. This is what happens. At a larger level, if you look at something like a Nifty 500, which is a culmination of top 500 stocks, again, what do you see is happening here? You've had a vertical move. Now, this vertical move is being digested. Consolidation is going on. It can come down as deep as this level, again, form some range, some shakeouts, and then eventually it can head higher. Based on whatever I've explained to you in my previous updates about trends, I've been very clear about one thing, that in the last quarter, we'll be having a dip, and a clean, smooth trend will only begin in 2026. A lot of things will come together. Currently, a lot of things are working against us also, whereas our local economy, our local liquidity, everything is working in our favor. What is working against is the global liquidity is not great. The Federal Reserve is not in sync with the government for the right reasons. And then you have a volatile and chaotic world leader who comes out and does whatever he wants, and that causes world markets to correct a lot. This is the theme of 2025, and I don't think this is going to change, because his term, I think, is going to be till 2028. So brace for it. These kind of moves, these kind of volatile moves where you lose some stocks in your PF in terms of stop losses, this will continue. Your job is simple. Your job is to cut your loss making positions. Your job is to retain your winners. Some winners will give back profit. They will move below average buy price, start giving losses, cut them out, but retain those top 4 5 names that just refuse to go down into the negative mark, because those stocks will form a base again and then will head higher. That is where you make alpha. That is where you make gains in your portfolio, because by then you would have understood the nature of movement of that stock, of that sector. You would know how those stocks are reacting, and you would be better suited to take aggressive bets whenever the next base gets formed in the market. Now, the next logical question would be, how do you form positions in such a market where you are continuously seeing selling pressure? I'll take Nifty Defense as an example. I'll take Nifty Defense and Capital Market as an example, because according to me, these are the strongest two pockets in the market currently. So let's assume Nifty Defense forms a bottom in the month of August or September. We see more volatility given what is happening in the global markets, and suddenly everything is turning bearish. That is when you have to make bets. Now, what I would do here is, let's say first week of September is when Nifty Defense would form a bottom. I would right away begin allocating money every week in this sector to get a better average price. So this is something called as systematic trading plan, where when things are moving lower, you divide your money into small chunks and then put those installments every Friday, every Monday, whatever day suits you. So typically I do a 8 to 12 week STP in high momentum spaces, so that volatility is absorbed, plus I get good, better average prices. See, one of the mistakes that a lot of people do, when do you think Nifty Defense was a sector that was coming back into favor? A lot of people were talking about it. It was precisely here. And it was at this candle that I had updated, please don't chase, because there is so much of euphoria that builds up in the short term. So you would rather be better positioned to buy a strong name as it is pulling back, as opposed to buying when there is a lot of euphoria. Same goes with Nifty Capital Market. Today, Nifty Capital Market is pulling back. It might come down here also. I don't know these things. But what you can do is average out your bets by strict position sizing, that is small chunks of money every week, and then review those trades. So what I typically do is, at a portfolio level, if I have over 8 weeks or 12 weeks, if I have formed a portfolio in a capital market or a defense index, I have a hard stop loss of 7%. At any given point in time, let's say third week or fourth week, that portfolio that I'm creating goes and hits -5 or -7%, I pause those installments and review. It's possible by the end of next week or the one after that, that -5% becomes -3%, and then you can again resume your systematic allocation in that sector, or whatever space you're tracking. So this is the approach you need to have when the market is forming a major pivot. For those who are new to this channel, this is how a trend functions. All right. And periodically you will get one sharp correction which becomes a major pivot in the market, and over time then again price heads higher. So this minor move is a minor pivot. This was first major pivot, minor pivot, again a major pivot, and the price heads higher. So currently either a minor pivot is getting formed or a major one is getting formed. You'll only realize this or come to know about this in a period of time. It's very difficult to say this. It's highly unlikely. Why you should not fear what is currently happening in the market. I'll just remove all these drawings. It's highly unlikely that we are going to get this. That is a drop of 20 odd percent. Yes, anything can happen, but for that you have your stop losses, you have your risk management rules. But it is highly unlikely. What you should be looking for is, wherever the market stabilizes, you need to look for when the pullback happens on the upside, what is the quality of this pullback? Are the names that were leading the market here are still leading here? That is a vital clue you will get. In my opinion, as of now, there is nothing to worry. There is nothing to worry because this is a part of a kind of visualization I had done for the market that in the last quarter, markets will pull back, again move up. A clean, sustainable trend will only begin, I think, in Feb, March 2026. But the pace of movement is what I'm keeping a tab on. For instance, if you look at Nifty 500, in 1, 2, 3, 4, 5 weeks, we have come down about 4.3%. This, in my view, is a healthy movement in the market. The previous correction that we saw a movement of 12%. Then we again saw a bounce of 8%. By the way, this bounce was not led by the winners from this pocket, that is this phase. And then we saw a sharper decline. So it is invariably the bounce that comes that tells you what is the nature of market in terms of distribution, whether we are going to see further downside in the market. And I'll update you about it. But as of now, I just don't see anything wrong in the market. The market still has a sound base. It is strong. The breadth is relatively okay. It is still about 50% stocks are above 200 DMA, 50% are below it. I don't want this number to start slipping below 35, 38% because that is when fall accentuates on the downside. So I'll definitely update about it. The structures that I'm visualizing is somewhere here or even before that. And then we make a dash on the upside. Now, either this move on the upside will surpass this, and then again we'll retest. That is something I'll only alert as time passes. For the time being, look at what your strong stocks are doing in the portfolio. Are they falling a lot? Are they bouncing back from support levels? That is a huge cue you will get in terms of the quality of move on the downside. So I reiterate, and I can be completely wrong here. I think we are heading higher over a period of time. It is just that this is a normal global volatile phase that will continue. America is losing its leadership in terms of stock market performance. You will see money coming out of United States and going to other markets as well. The only caveat that I would say is that I do not want a vertical drop in American markets because that will break the back of our trend also. As far as American markets keep gliding lower, even if it falls 10%, our market will absorb it and move high. So this pace of fall, it's better if it is something like this and not like this. I hope you get it. Because ultimately, stock market is a game of trend and sentiment. And over short term, it is sentiment that dominates the prices more. So my top 10, 12 picks where I'm paying attention is defense, private bank, capital market, hotel, IPO, hospitals, financial services, PSU banks, overall finance basket, bank nifty, insurance, and the dark horse, which is the metal space. It's not yet showing up on the chart, but I'm very bullish on the metal sector. I think metal sector is going to do very well. Let's see. As of now, I haven't been proven right, but price has not fallen also. So I remain optimistic. Let's see how this goes. All right, so I'll come up with another quick update next week. It's a bit volatile kind of time, so I'll make sure I'll make a technical video, the same thing that I've done today. So have a great weekend ahead, guys. Take care and be safe.